Hello and welcome back again. My name is Jim Wade, founder of Top Floor Insurance. On our last little video, if you saw it, we talked about building valuations, how to value the building. Today we're going to put it all together and talk about a key metric that you must know if you're going to be a smart buyer of apartment community insurance. You've got to know the lingo that we, the brokers and the insurance companies talk, and it's called TIV, Total Insurable Value. What total insurable value is, as you can see on the screen that's coming up here, it's the value of the buildings, which we just talked about. We use the square footage times a replacement cost valuation to come up with your building valuation. Contents, what are the contents? Everyone says, what are you talking about contents? Well, you've got some furniture in your leasing office. You maybe have some laundry machines that you're leasing that you might want to have to cover, some exercise equipment, pool furniture, that kind of thing. What's the value, the replacement cost value new of those contents? And then business interruption. Wow, business interruption is a tough one to come up with. But the mortgage company and the insurance company require that you value business interruption as the gross annual rental income for that property. We've got a whole other video to talk about that because it's a complete ripoff, I think, at times. Let's just talk about our building that we had before. You can look at the PowerPoint. 100-unit apartment community. We would come up with square footage of, let's say, an average of 1,000 square feet per apartment. That's fairly normal. $65 a square foot is kind of the going rate that a lot of insurance companies use. So for that apartment building, the valuation we might use to insure it would be $6,500,000. If we don't have much contents, because it's kind of an older building, there's not much to it, maybe we'd throw in just $10,000 of contents. Finally, we'd come up with the actual gross rental value that you're receiving on an annual basis from that property. I put it down in the example as $490,000 just so we can make it nice, a clear example of $7 million worth of total insurable values. That's the number that you need to know when you're analyzing the cost of your apartment community insurance. And then what we do is we take that $7 million, so that's what we call the TIV, the total insurable value, and we multiply it by a rate. So what are the current market rates right now? A good rate is 20 cents per $100 of values. So if you look at another example up there, 20 cents times $100 of values on a $7 million total insurable value would give you a $14,000 premium for your property insurance. We're not talking about liability or umbrella. Another example would be if you have a real older property that has a lot of problems, a 40-cent rate. That would be $28,000. So we're going to take all this and put it together in another video, but I just wanted to tell you those are the key metrics you need to know. You need to know what your total insurable value is. You need to know what your rate is. And now you can start comparing with other proposals and other competitors of yours. What rate do they have? Thanks for listening. At Top Floor Insurance, as always, all we do is provide better apartment community insurance, period.